matter of mechanics, and we've seen these cycles go many times before. And what that means is, as they raise interest rates to deal with inflation, they put the brakes on credit demand, and they put the brakes on the economy. And as a result, they also make the stock market and other assets worse. So unlike the first part of the cycle where they put a lot of money in and there isn't yet inflation, we're farther along in that cycle, so that there is the rise of interest rates and the adverse effect that that starts to have on markets and start to have on the economy. I don't think this year will be the bigger year. It usually takes more time in the cycle. But yes, the types of interest rate rises that you're talking about are likely. But what is more concerning to me is that because of the amount of debt and because of how low interest rates are in relation to inflation and relationship to growth, that the amount of tightening that is necessary to produce adequate controls on inflation is a level of interest rates that is not able, the economy and the markets cannot withstand. So I believe we've entered a period of time that over the next few years, you're going to run into more of a stagflation kind of environment as the central banks, not just the US, but most importantly the US, try to balance two difficult things: to control inflation without hurting the economy and the markets so badly. I started coming to China in 1984, and it was an important part of my life. I didn't come to make investment money because China didn't have investment money then. I came because of curiosity, and I stayed because of the quality of the people that I met and the relationships that I built, and that happened over a long time. I was able to participate in many ways. And then through that time, I built relationships and understanding, and so I think that those are the most important things at this time. Those relationships, those understandings, to get over misunderstandings and to be able to communicate each other's perspectives and have work toward at least a win-win relationship. There will certainly be competitions, and competitions can raise the quality for the world. And then competitions could also turn into wars, and wars could be terribly destructive for the world. And so I think it's very important, it's maybe the most important thing, that we have that kind of mutual understanding and work toward cooperative relationships to make the first type of win-win relationships rather than lose-lose relationships. Since I had the pleasure of going in 1984, per capita income has increased by 26 times. The average life expectancy has increased by 10 years. The poverty rate has gone from 88% to less than 1%. It is certainly a very much stronger in all dimensions. Diversification is important. I think different countries have challenges. All countries do, and the United States has its own challenges. And so it doesn't mean to invest all one's money in any one place. But when you have the two biggest competitors and you could see good opportunities in the capital markets, it's a good place to invest.